Ça, c'est pas allumé là. Il sait, tu l'as montré.
Je vais montrer comment on l'a fait.
C'est assez fort, de toute façon, la distance. Ah bah le micro quoi. Ah bah la lumière aussi.
You need?
Yeah, she's the lights. This is still, no.
You don't need-
So this is for the speakers afterwards. She needs
Okay,
this one
okay.
for the. She needs for the room.
You need this one?
For the room, yeah.
Oh, fantastic. Wow. Andrea, they stay here? Do you want to stay here? Huh? It's perfect. Okay, go. Okay, we can start. Thank you to all to stay here. And good evening, everyone. Distinguished guests, colleagues, and friends. It's a real pleasure to welcome you today on behalf of FECIF. Events like this are essential. They bring together institutions, industry representatives, and professionals to reflect on a question that's becoming increasingly central for Europe's future. How to empower citizens to make informed financial decisions in a rapidly changing economic and regulatory environment. At FECIF, we represent a broad community of financial advisors and intermediaries across Europe. But beyond representation, our mission is clear: to promote high-quality financial advice, strengthen professionalism, and the assurance that citizens have access to guidance that is transparent, responsible, and aligned with their long-term interests. Today, this mission is more important than ever. We are living in a moment of profound transformation for the European financial system. The European Union is moving forward with an ambitious agenda, from the evolution of the capital markets union to the development of the savings and investment union, with the objectives of mobilizing private capital, strengthening long-term investment, and supporting economic growth. At the same time, the regulatory landscape is becoming increasingly complex. Regulatory developments in the European Union, particularly in the area of retail investment, sustainability, and digital finance, are contributing to the ongoing evolution of how financial services are delivered and assessed. This is reflected in existing frameworks such as MiFID II, as well as in the expanding body of ESG-related regulation. These efforts are important and necessary. They aim to increase transparency, protect investors, and foster trust in financial markets. But they also raise critical questions, because regulation alone is not enough. If we truly want European citizens to save more, invest more, and participate more actively in capital markets, we must recognize one fundamental element. Financial advice is not just a service. It's a key driver of economic participation. Financial advisors play a key social and economic role. They help individuals navigate complexity. They translate regulation into practical decisions. They support long-term planning, especially in areas such as real estate investment and retirement, where public system alone may no longer be sufficient. And most importantly, they build trust. Without trust, there is no participation. Without participation, there is no real capital market. This is exactly why today's discussion is so timely. As highlighted in the objectives of this event, we are here to explore how financial advice can support long-term savings and time adequacy, facilitate retail investor participation, and contribute to the digital and sustainable transition in Europe. In other words, how financial advice can concretely support the ambition of the Savings and Investment Union. This requires a balanced approach. On one side, we need a strong and effective regulation. On the other, we must avoid creating unnecessary complexity that risks excluding citizens from financial markets instead of including them. We also need to invest in financial literacy, because even the best regulatory framework cannot work if citizens lack the knowledge and confidence to make choices. And finally, we must ensure that financial advisors are recognized as partners in policy making, not just as passive recipients of regulation, because they are those who are closer to citizens. They are those who understand their needs, concerns, and behaviors, and their perspective is essential to design policies that actually work in practice. This is the spirit in which today's event has been conceived, to connect policy, industry, and practice, and to ensure that the voice of financial advice contributes to shaping Europe's financial future. White Book presentation. Let me now turn to the 2025 FECIF White Book, which provides the foundation for today's discussion. The White Book is FECIF's flagship publication, but more importantly, it's a collective effort to understand how financial advice is evolving across Europe and how it can better serve citizens in the years to come. It covers 30 countries, including all EU member states and key non-EU partners, offering both qualitative and quantitative analysis. But what makes this work particularly valuable is its methodology. The White Book is not just based on data and regulatory analysis. It's grounded in direct insight from the field. We conducted in-depth interviews with experts and professionals across Europe, structured around key questions on digital transformation, sustainability, and retirement planning. This approach allowed us to capture not only trends, but also real experience, expectation, and challenges faced by advisors and their clients. The result is a document that reflects the diversity of European markets, while also identifying common partners. And what does the White Book tell us? First, it confirms that Europe is still far from having a fully integrated capital market. Investment behaviors remain strongly national, and cross-border participation is still limited. Second, it highlights that regulatory complexity is a major concern. While regulation aims to protect investors, it often increases the administrative burden without necessarily improving outcomes. Third, it shows that financial advice is becoming even more essential in a context where products are more complex, sustainability considerations are more prominent, and digital tools are rapidly evolving. And finally, it emphasizes the urgency of addressing retirement adequacy, as demographic trends put increasing pressure on public systems. Based on this finding, the White Book outlines a number of key priorities. The recognition of the social role of financial advisors as key actors in supporting citizen financial well-being, a balanced approach to digitalization, promoting innovation while ensuring consumer protection, stronger investment in financial education aligned with the EU strategy, the simplification of regulatory frameworks to reduce unnecessary burdens and facilitate access to financial services, and greater involvement of advisors in the development of the saving and investment union. These recommendations are not theoretical. They are grounded in the daily experience of professionals working with citizens across Europe. And they all point in the same direction, making financial advice more accessible, more effective, and more impactful. This is exactly what today's panel discussion will explore in greater depth from a practical perspective with insight from today's speakers. Thank you very much for your attention. Simone?
Thank you very much, Vania.
I don't see you.
Thanks, Chair. I will call the panelists to the stand. Feels like the ceiling is really low. Thank you very much. Let's see. Should we? Yeah, I'll sit around here. So I'm calling, William Vidonia from Insurance Europe, head of unit FISMA P3, DG FISMA. Andreas Stęplicka and Jacopo Borgognone, and of course my distinguished colleague Josep from the EFPA Spain. Do you want to sit here? I'll sit sure. I'll be there at the end. Yeah.
Are you sure?
As you like, Josep. I'll be here. Sorry. Well, thank you very much for accepting to take part in this panel. In the interest of time, if you agree, I suggest we dive directly into the questions. We have heard from Vania the presentation of the White Book, and for those of us who've had the chance to read it, and I urge you to have a look through it maybe after the event. It's full of interesting, useful information and insight from our members and our colleagues throughout Europe. One of the key findings, as Vania laid out, is that whereas European households are very rich, households in Europe have a total financial assets of maybe 50 to 60 trillion euros. It's a huge amount of money, and I'm not even considering the real estate investment. So European households are rich. They have huge financial assets. At the same time, we hear and we read from the reports of Mr. Draghi and Mr. Letta that Europe needs to invest a huge amount of money in its own future, in its digital transition, in its carbon transition, now in its defense transition. But at the moment, we have a disjoint approach, assets that are not themselves invested in the future of the European economy. So where where should we start from there? Andrea, do you want to take the opening question, or do you want to leave the
I'm very happy to listen to industry first, but...
Okay, should we start with Andreas then?
From Andrea to Andreas.
Yeah, from Andreas, exactly. I'll just follow the alphabetical order there. Basically, Andreas, if we see in the white book, money is available, it's not put to work in the right place, what do you think can be done?
If I'd known, I'd simply summarize the Letta and Draghi report for you in a kind of snazzy way. But look, it's, I think, a good question, but I think also a lot to unpack. And I think I'll probably miss a lot of things as well. But when I thought about this, you know, there's a couple of things that I think are really important. Some of them I'm sure you'll be happy to hear from me as well. I think number one, it's about financial literacy. You know, like, I mean, also Draghi, Letta, they all talk about, you know, like this missing investment culture. But I think this can only start once you have the fundamentals, you know, like the fundamentals of understanding what you need to invest, how you need to invest, when this is supposed to happen. However, we all know national prerogative, all this is going to take time. So until we have that, I think the flip side of all of this actually is financial advice. Because in a way you need to bridge that gap that is currently there by making sure that people are presented with the right opportunities and the right questions are being asked. You know, like, why are you saving, for what purpose, and what you're investing is then becoming a bit more secondary. I think what you were saying as well, you know, so it's interesting, and I think it's also another trend, which is, you know, in terms of how can I put this? So kind of like priorities, you know. So we are, in one hand, I think, at least from our perspective, what we always had was a very strong debate about performance, returns, costs. And I think I'm sure we'll be talking about the retail investment strategy and stuff as well. But there's a general theme about, you know, like the less costs you produce, the more is left over for investors, which is true. But you know, in a way that also has some intended consequences. So you're looking at, you know, like the question about financial advice. Is this worth it? You can go to look at execution only, that is quote unquote for free. You could look at ETFs. They themselves are then predominantly invested into the US market simply because of those deeply liquid capital markets that are there. But now we're coming to this question about, you know, like this European sovereignty. So how does that fit in? So how do you then kind of like make this part of the equation, also for financial advice, that you know it will cost more to actually make people understand that it's important to invest also with this strategic viewpoint, but also in a less liquid and more fragmented market in the EU. Maybe, of course, you know, it's also a question in a way, at least from my perspective, I've been looking at distribution a lot. It's also, you know, like, where can you start with all of this? And I think in some way we're midstream in all of this already. I mean, we have the retail investment strategy that is almost going to be over. Those dies have already been cast as well. And I would argue for some of those results that have come there, the outcomes are not where we want to go on. So maybe that's hopefully a good opening response to your very wide question.
Starting a good debate. Thank you. Can I maybe turn to you, Jacopo, to see how what is the role of banks in this, between the products, the clients, and the redirection of some of these flows of money?
No, thanks a lot. I'll try to be brief. I think I want to pick up on a couple of things that Andreas already mentioned, but I'll come to the role of advice as well, because I think I was going to come to the same conclusion of how sort of fundamental it is at this stage. I think for the banks, the role is also very significant, and I believe that the banks themselves, probably the same as the financial advice, so the function and profession, will have to respond to certain questions that are not only related to for example, about the adoption of new technologies and being able to serve evolving client demands, the same way that this is a question that advisors will have to sort of understand how to respond, the same goes for banks. And I believe that one thing that we are seeing more, and probably you can confirm as well, is for banks as sort of acting in between, the products and the advisors being with different distribution networks, tied agents, and the like. We probably will see a stronger integration of the different business lines of the banks to be able to serve clients, new clients with different, more sophisticated demands in a sort of 360 style. So not less in a compartment sort of mentalized state and more sort of mixing, wealth management, retail banking, payments, coming also to the financial advice, execution, etc. So I think one of the strategic questions will have to be sort of being able to address client demands in a sort of way that fits the time, so to speak. But I think I want to second also what Andreas was saying about the role of financial advice, which connects the banks as well. For me, I think, and thank you very much for the white book. It was really interesting to read. I should also point out as having sort of the banking view that, of course, we fully agree on the diagnosis. So there's a part of sort of the disposable income of households that could be allocated towards more long-term investments. Of course, we would also have to point out that most of these savings are allocated, for example, in cash or bank deposits, and bank deposits are not immobile. The perception could be that bank deposits serve, the basic mortgage and SME lending and so on. So they are actually the backbone of the financing of the economy, and especially a bank-based economy such as the EU. But it's true that the crux of the matter is asset allocation, and perhaps a percentage of that 30, we counted 37 trillions in risk and low risk assets, could be better allocated, intermediated towards long-term assets, and that's the challenge. And this is where the role of financial advice becomes key. I don't want to take too much time from the others, but I think one point that the report also stresses a lot, and for me it was the line that sort of caught my attention the most is, I believe there is a line in the report that sort of stresses the lack of awareness on the future sustainability of the pension system. So the fact that most of the people still believe that their future retirement needs will be taken care by the state in the current pay-as-you-go arrangement. And of course, we all know here in these rooms, but we should sort of repeat it every time we can, that from our perspective of the industry, there is a pension time bomb kicking. And so the role of advice becomes even more crucial, because people will also have to be ready for retirement. So I'll stop here, but happy to expand.
Well, I'm sure we'll come back to it. Thanks a lot, Jacopo. But you've naturally opened the door to your neighbor, William, on insurance. What do you think is the role of insurance in both today, reshaping the way the household savings are redirected, but also making people aware of their long-term financial needs?
Yeah. Okay. Well, we're getting back to the role of advice here with your question. First thing I'd like to say is really congratulations on the white book. I think that was really a necessary exercise. I read it, and in the end, I don't think there's anything really surprising that came out from that book, which is actually good news. Yeah. I don't want this comment to be controversial in any way. Absolutely. I think that's really good news. Yeah. But the diagnosis is correct. I mean, the money to finance EU needs is there. The challenge is really how to convince people to not only saving, because I think that's good that people are saving, correct, but also to make sure that at least part of their money is being invested in the financial market. And I think this is really the key question that this white book is also raising. in the context of this SIU, but also in the context of consumers' well-being and financial situation, short and long term. And this is where the role of professional advice and financial advisors matter, and where it's extremely important, because financial advisors are super important to raise awareness, make sure that people understand what their financial situation is and what it's going to be in the future. So have this long-term horizon that usually people don't get. The second thing is to turn awareness into intention. And that's also a challenge. And this is where, again, financial advice can help connecting the needs of the people together with the different offers and benefits that exist on the market. And probably the most challenging part is actually to turn these good intentions into real-life action. And again, this is where financial advisors and advisors in general have a key role to play, to make sure that people do not procrastinate, because this is a main danger that we face in general, next to lack of awareness, is really inertia and procrastination, especially in an environment that is being perceived by many consumers as complex and slightly intimidating and stressful. So they don't like taking these kind of decisions. And again, this is where financial advisors help to take these financial decisions. So that's the first point. Financial advice is really important. That makes a huge difference on people's well-being, and that's also key to the ambition of the SIU. So that's really important to maintain advice accessible now and in the future. I think that's a point connected to the return investment strategy. The second point that really came out, I thought, from the White Book is in general that there's no one-size-fits-all solution, because there's so much diversity across market realities, but also across products. We have a lot of different products, from pure asset management to insurance-based investment products, which in itself is an extremely diverse world, with a lot of different types of products responding to different types of needs and profiles from consumers, depending on what they want to invest, their also risk appetite, their time horizon, and so on. And I think this diversity is actually very good, because the more diversity you have in terms of products offer, the better it is for consumers, because they can find something that is actually tailored to their needs. And this is, again, where financial advisors help to connect the dots between the needs and the solutions on the market. But we need to make sure that we got a regulatory framework that preserves that diversity now and in the future. And then the last point I wanted to bring, I think advice is really a key topic at the moment. And the White Book findings are actually very much aligned with the work that we did also in Insurance Europe on the value of advice. Again, I want to assure you there's a lot of consistency in terms of the findings, which is good. But one thing we're trying to bring out also in our reports is actually the value of advice for consumers in comparison to consumers who are not receiving advice. So what we see in practice is that people who are receiving advice are managing to build up much more wealth compared to people who are not receiving advice. People who are receiving advice are also more likely to invest for retirement. So they're getting prepared for old age pensions, and they're investing much more, and they feel much more confident about their future financial situations, which is good. And finally, we see also that financial advice is having a very positive impact on the peace of mind of people. So they're feeling more confident and secure about their financial situation in the future, and they feel less anxiety, which is also very important. So you see that in the end, financial advice, I'm looking at Andrea here, financial advice is actually providing a number of tangible benefits to consumers in different forms, but also to Europe in terms of growth and prosperity.
Thank you very much. Couldn't ask for better advocacy. Maybe, Joseph, do you want to react from your perspective, both in terms of the advisor, of course, but also the need for these advisors to be well-equipped and well-trained and be able to find the right balance between trust and transparency of information?
Yeah, we are for sure, and this is a proof that we are in the continent of the consensus of a diagnosis. The problem is that we are not in the continent of consensus of actions and solutions. Then it's clear. Then in that aspects, we are fully consensual, and I really like to listen so many good words about financial advice, and representing financial advice, we have to say the same. That's clear, that it is extremely important to advance in the direction of the solutions. But then, having said that, yes, we have an important task to develop, but we need, I will say, at least a couple of things. Financial advice by itself cannot achieve all these tasks that we are been saying that we have to develop. And let me at least comment a couple of them. One addressed to the administrations and one addressed to the industry. To the administration, and let me put a very simple example. It's extremely difficult to convince the savers that they need to become investors. And what I mean investors is real investors, assuming risk. Let's say the things like this. It's not just the point of talking about bank deposits and bank accounts. It's also to tell the people that if you invest in very conservative products, you are not going to advance much. Then it's very difficult to tell the people that when the government is not telling their people that the public pensions are fragile, to say it in a moderate tone, and that they need really to complement public pensions through investment, not through savings, but through investments. In my case, in my country, the government is absolutely absent of this debate. As a matter of fact, it's a full taboo. Tell the people that they have to save in order to get their pensions better. And then it's very difficult then, just from the private sector, trying to convince the people of something that the government is implicitly not explaining the people. Second, to the industry. Yes, financial advice has to play a good role, but we need help on that. First of all, we need to accept a financial advice based on a really qualified professional attitude in that sense. Then we all need to push that financial advice is more and more professional each time. But we have to give autonomy to the financial advice. Listen, for instance, medical doctors. Medical doctors are also depending of what the hospital or the sanitarian institution offers to the customers, to the patients, but also by themselves, they have an obligation. They have a responsibility. We have to give the professionals a responsibility to act in this way. They have to act on a fiduciary duty, for instance. They have to be professionally responsible of what they do. They need to be autonomous. As far as we give financial advice totally dependent of entities, it's going to be very difficult for financial advisors to accomplish these objectives. Then, as financial advisors, at financial advisors institutions, we need a change of mentality in the industry, and of course, a change of mentality in the administration. Sorry to Andrea, because probably you will not like too much what I'm going to say, but for instance, the recent speech by the commissary in Helsinki is an example that financial advice is not totally understood. Because more or less, the commissary is saying, financial education is the most important thing, and if we reach financial education, probably we will not need much financial advice. Because, sorry, no, I'm going to give her the idea, is when she talks about financial advice, she talks about probably non-regulated financial advice, which also exists. But it's important to say, at the same time, that there is a lot of regulated financial advice. And probably in this speech, if you want, we can talk again to that. It's a little confusing when she's talking about financial advice, about which type of financial advice she's talking. Then we need also from the administration and from the European Commission are the less guilty on that, clearly. The governments, the national governments are
far worse.
much worse on that. But I think it's important to tell that also. And since the administration is also only represented by Andrea and by the European Commission, it has to be said also. Sorry, a little long, sorry.
That's all right. And we all thought it was going so well. Now we can pass the microphone on to Andrea, and maybe I don't know if you want to react to Joseph's point, or maybe more generally. We all agree, as Joseph put it very nicely, we all agree in the diagnostic. What can we do about the action plan? What it is that we can change, and how do we find the right balance between this trust, this comfort, and this action? How do we get households to actually take action on what they need to do?
Yeah, thank you very much. Thanks for inviting me again. Very happy to come. I fully agree, of course, with you that the diagnosis is clear and everybody is saying this. Now, what we do about is a kind of the $1 million question, right? So, and there are, I guess, different answers to that. And we, as Commission, we've tried very different angles because we don't believe there is just one silver bullet to solve this. But we are working on different initiatives, as you know. I'm sure you've followed, and some have already been mentioned. We are working, of course, with the limitations that we have, given the lack of competence. Of course, we're working very strongly on financial literacy, which we also believe is key. We have come up with a financial literacy strategy. We are trying to work with ambassadors from member states to raise awareness. We've done competence frameworks, including for young people, and we're encouraging member states to have their financial literacy strategy. So we're doing a lot in this area. On the other side, we've also, of course, under risk, we have now been trying to work strongly to ensure value for money, because we think this is also an important part. It's not just about trust, but if people don't get enough out of it, they might not see the point in investing. So it is important that they actually do have an incentive to invest all the money that they have on, not all the money, but parts of the money they have on their savings accounts. If they don't get more out of it than what they get on the savings account, then there's no need to take any risk. So therefore, we've been working very much on value for money. Let's see how far this gets, of course. Then we have been working on the savings investment account. We're trying here as well to work with, we've done a recommendation to work with good practices that exist in different member states. So we are doing a lot. But the question, of course, is this enough? Is this going to work all quick enough? Don't know. But all this is, of course, not enough. That is clear. But what we, of course, also need is we also rely on you. We also rely on financial advice. It is fully clear that no matter how much we work on financial literacy, not everybody is going to become an expert in investment. And not everybody is going to want to become an expert. And it's perfectly fine not to be that. So this is very clear. So yes, it is very important to have financial advice, at least to have the possibility to have financial advice, and I fully see that. But of course, I think we also need to see that people are different, as you've said yourself. Some they might not need financial advice. Some might be experts or might be able to take their own decisions, go and invest execution only themselves. That is perfectly fine and possibly cheaper in some ways. I think there is it is very clear that if you do take out advice, somebody will have to pay for this advice, and that is very clear. There might be others that might not be fully self-investing, but can get on with some guidance which you can also find. And there might be some people that can do with more simple advice, maybe not a full large-scale assessment, because that's a question you might be raising. Does everybody really need super detailed, personalized advice, or can we also think about some further ideas of I don't know, more standardized ideas? You know, not. We have millions of people, not everybody is gonna have exactly, you know, needs to have very different advice from the neighbor. I mean, there are some basic ideas, I guess. Maybe we can work a little bit along this. But it is clear there will be a big part as well, which will remain, which is for advice, which we need. And we need you to help people invest, to invest long term. But we also need, of course, and I think I've said it before, and we need also good advice. Good advice based on, of course, a lot of professional qualification and knowledge. Also good advice in the interest of the client. I believe that's important.
That's a very good closing one. Thank you very much. I think we all agree on that one, the importance of having the advice and the investment tailored to the needs of the client. Maybe not going to dive into the SIA itself for the time being. I'm not sure if we've learned all the learnings that were to take from the PEP experience. But maybe on the side of advice on technology, we see technology taking everything by storm. And of course, the obvious question at the moment for every job in services is, will it be killed by artificial intelligence? Will financial advisors go down the same way as accountants, or as all the white collar industry is being undermined by artificial intelligence? It's not going to replace the lobbyists yet, so you're safe for the time being. But your constituents might be attacked. What's going to be the impact of technology, advice, products? Are we going to go to something that's simplified and that's digitally delivered, or is it going to be the digitally enhanced advisor? What are your views on that? Who wants to dive into this question? Them, they want to have a go.
I'm happy to start from the insurance perspective.
Please.
Because it's really interesting what we see in insurance in terms of consumer behaviors and attitude and preferences. Also, we see really a lot of differences across the different markets. Like in Sweden, for example, people are really much more comfortable to engage online and to buy their insurance products in a digital way. We see also of course, differences across different demographics, like with the youngsters being also at ease with influencers, which thankfully also the retail investment strategy helped to address partially, but also with AI, and I'll come back to the point of AI, which I feel is a very important one for financial advice. And then we see also a lot of differences when it comes to different types of insurance business lines, meaning that people will tend to go online and buy their products in a digital way when it comes to general insurance product, especially more standardized product like home insurance and motor insurance, but a bit less when it comes or actually significantly less when it comes to insurance-based investment product and pensions product. But it doesn't mean that things are not going to change in the future, because what we see clearly is that things are evolving, and they're evolving pretty quickly. There's no general pattern except one that we tend to see all across the board, which is people tend to like having what we call a hybrid approach, meaning that they jump on and up from digital, like they start the process with looking online, what exists in terms of products and so on. But then when things become more serious, they want to see someone, a real person. So they want to get a real advice. And the conclusion of the contract is usually met with a real person that you can complain to afterwards. I think that's important for people, including the youngsters, actually. But one thing that we see also is in relation to AI, where, of course, financial advice is not immune from AI, and especially from strange behavior by consumers. We see people using AI for different types of purposes. So it's not only to fine-tune the wording of an email, but it's also being used as a professional or life coach. People are considering ChatGPT sometimes as their best friends. I've even seen people, being described as being in love with their ChatGPT, whatever it is. But they're also using it for what they perceived as being financial advice. And that's a real issue, because they're saying, like, I got this amount of money, what can I do with it? What do you advise me to do? In which type of product should I be investing? Which type of provider should I, and so on and so on. But the problem is that there's nothing regulated here. It's not supervised. There's no protection for consumers. But this is not the way consumers perceive it. So they see it as advice. And we know perception is reality when it comes to consumers. So that's really an issue that we know, of course, regulators and supervisors are being aware of. Definitely financial education initiatives can help there, digital literacy, just to make people aware of the risk, and that ChatGPT or copilots are not financial advisors, but that's probably not enough. We need to do something more there. It's also an issue in terms of somewhat level playing field for real financial advisors, because how do you compete with a system that is so easy to access, and that gives you the comfort and the feeling that you're receiving real advice when you're not. And next to that, you got financial advisors who are duly regulated, supervised, who have training requirements that are very strict and so on, and that are being regulated also in terms of how they provide advice. So you feel that there's something that is not really working between a solution that is really readily accessible for consumers and something that is requiring an effort by consumers to go and seek advice and meet someone in real. So that's a real issue that I think needs to be addressed in one way or another, or discussed. And the second thing that we see, which is really on the legal side there, is things are evolving also in terms of partnerships. So we see financial institutions and also insurance intermediaries partnering with AI like ChatGPT and Copilot. We saw that in Spain, for example, with ChatGPT and Tuyo, where now consumers can have what is looking like a very natural conversation with ChatGPT to answer different questions about home insurance. Well, consumer is getting there, asking, okay, I got this apartment here, where can I find a proper insurance coverage? And then in partnership with Tuyo, there's a natural conversation that is starting where ChatGPT is asking, okay, where is exactly your apartment, which floor, what is the number of square meters, and so on. And at the end of the process, if you're happy with the quote, then you're being led to the website of Tuyo or the application. Of course, this is raising questions in terms of how is it regulated? Is it insurance intermediation or not? Whether the IDD standards are applying not only to Tuyo but to ChatGPT. And I think this is something your colleagues in the insurance unit are looking at. But we know that this is only the start of the process, and then the next step will be for other types of products. And I'm thinking about life insurance products. And that is something that is really interesting for supervisors, regulators, but also for financial advisors to look at. What does it mean for you in terms of, competing with this type of technology? How do you incorporate these technologies also to better serve consumers? Because I'm not saying it's a bad thing. That could really help consumers to get more interested and more aware of the risk and the different solutions on the market. And this is where I think financial advisors will need to demonstrate their added value compared to other types of tools that are existing in the world.
Added value of complementarity.
Yes.
Josep, do you want to react on that, or?
No, I have this. Sorry, on the
Yeah, it's
on the use of technology, I agree with you. We have to. It's not as easy as saying you should not rely only on technology and on artificial intelligence, but the human advice has to be there. We can say it's true, and the only right advice is the one that probably should know you as a customer, as a citizen, and can modulate which type of advice is. That's quite clear, but we have to show it, and I fully agree. But then, since you also said one moment ago something that I absolutely agree. I mean, the variety of offers in the financial sector is very positive. Is something that clearly it adds things. Then it could be an investment fund, could be an insurance product, it can be a bank account, whatever. No, I mean, I think it's important to have a variety of offers. But let me say one thing: this idea that the people has to invest and the savers have to invest has become not only not something which is linked only to the financial sector, but it has become a very important need of the whole economy. Then, as a very important need of the whole economy, we need some incentives for that. The people need some incentives. And we can talk about a number of incentives. Listen, the European Commission make a very important point, saying that we need, or the countries need, to generate these savings and investment accounts. Completely sure. But unfortunately, the European Commission could not say something about the great incentive for that, which is the tax incentives, and that are dependents of the countries. When this idea of the European Commission arrives to the countries, you know, every government is looking to another place, no? Because then it touches the pocket of the government. And for the moment, no one has offered any incentive in that sense. And these incentives are absolutely basic, important. At the end, we can give all type of advices, but the most important thing, how much are you going to pay for that income that is going to be generated by the investment? At least we need two incentives. One, that we can all cooperate. We need more integrated capital markets, that's clear. Large capital markets, more liquid capital markets, and more attractive capital markets. Because if not, it's going to be very difficult to tell the people, no, you have to invest in Europe, do not go to invest in the US. Then clearly, that's an incentive. We all need to cooperate. But the second very important is tax incentives. This is a basic objective of the European economy. Then the countries, I don't know how, they need to give and provide this kind of incentives. It's not very nice to talk about, you know, at the end of a discussion saying, yeah, but that needs to be cheaper from tax position. Yes, that needs to be cheaper, because that's the only way the people moves, and it's normal. Yeah.
Key argument. Yeah, there was a debate we had around the PEP, and we're going to have around the yeah, where we had this debate, and we will certainly reopen it. Andreas, did you want to react?
Yes, happy to do that.
Yeah.
Maybe a couple of things, both I think what was said before, so by Andrea, also by William, that I'd just like to react upon. I mean, one of them I see as well, you know, it was interesting when you were saying the more it comes to investment advice, the less you currently see the use of digital tools, AI and stuff like this as well. So it's the same from our side as well, that we see now currently less pronounced. But I think, and it comes back to maybe also what Andrea said, you know, like this kind of like this question about ease of access. I think this was also like how easy is it to access something. So I think this is something also that's quite important, where we see in particular, because we haven't touched it yet, you know, like platforms and stuff as well, so digital platforms. So we do see a growing trend there, and it goes back to what you were saying, you know, like maybe someone doesn't need the whole package. Maybe they just buy, you know, like a diversified ETF, and that's it. That then is also interesting, and maybe comes back to something I'd like to talk about later, is kind of like this question then, where do you leave investors, and especially younger investors, with that? And I think it was ESMA actually in its last risk report that was talking about, it's actually interesting to see the trends that are currently there. So you have a big accumulation of AI stocks, because it's the hot commodity at the moment, you know, but also, of course, crypto, but you also see, you know, very complex financial products, so turbos and stuff as well that are being bought. So then kind of like it's this question, by leaving people on their own, the societal value that you have, and you know, wider kind of like financial stability issues that are interesting on this as well.
Replacing advice with crypto, that's a good idea. Okay, Jacopo, do you want to give you the, what, 1 minute, and we'll then...
Sure, no, but
Andrea, finish
1 minute, because I think you've mentioned the interesting word. Maybe on my side, I mean, since you mentioned incentives, so I just want to fully subscribe. We may come to that part, of course, but if you read any EBF position paper on the Savings and Investment Union from here to you know, one year ago, you will find this expression, capital markets mindset. So we've always advocated for member states to adopt a capital market mindset, which means to really translate into concrete policy priorities what is agreed at very high level here in Brussels, which includes, of course, tax incentives. Of course, the issue, the challenge to a certain extent is that there is strong commitment at very high political level, also thanks to the various reports that were mentioned, but often it's difficult then when that political commitment is brought back to the capitals. It has to compete with different policy priorities, and sometimes it falls down the list. So the challenge is to make sure that when leaders discuss and agree and they go back to the capitals, that the level of commitment remains very high at the Ministry of Economy and etc. And also maybe on technology, I think since we were mentioning one aspect that I think is interesting to stress, also thinking from a banking perspective, is, as I said before, the question of technology is not a question of adaptation. It's a strategic question. So it's not a question for a network manager or product manager to think how they can incorporate this and that technology. It's a question for CEOs to consider whether or not they can adjust their value proposition for different client segments that they serve in a way that makes them competitive, or otherwise they have to consider different solutions, as you were mentioning, partnering with third parties, or you know, even leaving that specific business if it doesn't make sense, if the scale is different. So in that sense, it's strategic. And why do I say strategic? Because the questions are profound when it comes to technology and serving clients that are going into the direction of wanting more choice, not less choice, in terms of access points, execution venues, products offering. So you've mentioned different products, including the new, you know, DLT-based products and tokenized products. If you want to deal these specific products and offer to the clients, then you have to ask yourself, do I have the capacity to build the DLT infrastructure that comes with that, the ability to operate 24/7, and et cetera, et cetera. And the same goes for AI. Do I have the capability to process the data infrastructure that I need to help AI scale for the bank? So in that sense, it's a strategic question, not just a question of adaptation, which would have come, I mean, the sense of strategic questions is that they come anyway, irrespective of whether there's a regulatory development or not. These are questions that sooner or later you would have to address. So.
Yeah, and if it doesn't come from Europe, it will come from the US, as we all know. Andre, can I ask you to maybe finish off our panel here, because I'm conscious of time.
Yeah, look,
it's fascinating discussion, but I think I have to. I'm sure people are getting thirsty.
I'm very very short. I thought it was very interesting, and unfortunately, I'm not able to help on the tax incentives. I mean, I fully see that this is a very powerful tool, but yes, the purses of member states are not that deep as we would sometimes hope for these things. On digitalization. Now, I'm not a specialist on this, but I think we can all agree that digitalization brings enormous opportunities, and including for investment. I mean, we've seen the neo brokers. Those are the ones also in recent years that have managed to get people into investing. I think I've seen some figures sometimes in Germany with some of the neo brokers, and they managed to collect a considerable amount of money. So there are very good things about it, and I think we should just be happy and compress and embrace it. However, of course, nothing is always only positive. There are risks with this, no doubt, and we will need to look into them. I can also see that clearly ChatGPT and all those tools can create difficulties also for financial advisors. I mean, I'm sure, and you've just mentioned examples. They can help you as well. They can they can help become also more cost efficient in some ways. But yes, there might be risks as well. Financial literacy and education is hopefully an important part of the answer as well. People need to understand. I mean, it's all a learning process as well. How do people deal with AI, and what can AI do for you? That's an important process. I think that everybody needs to learn. But yes, we will need to look into this as well, of course.
Thank you, Andrea, and hopefully keep advisors at the heart of it as well. Thank you very much for this fascinating exchange of views, all the panelists. Much appreciated. I'm going to give the floor back to our chair, Vanya, for some closing remarks.
Thank you.
Thank you. Yeah. Yeah, we'll leave the
Only for me.
floor back. Unless you really want to keep.
Do you listen me?
Yes, we hear you.
Don't want to miss my white book.
Thank you. Thank you very much for this rich and insightful discussion. I would like to conclude by thanking our distinguished speakers for their valuable contribution and all for your engagement. Thank you. Today's conversation has clearly shown one thing. Financial advice is not a marginal element of the financial system. It's a central pillar of Europe's economic future. We have heard how financial advice can strengthen long-term savings, improve retirement outcomes, support citizens' participation in capital markets, and accompany the digital and sustainable transition. But we have also heard about the challenges: regulatory complexity, limited financial literacy, fragmentation across member states, and the need to rebuild and maintain trust. These challenges are real, but they are not beyond our reach. What emerges clear from today's discussion is that we already have many of the tools we need. We have a strong professional community. Thank you. We have increasing awareness at the policy level, and we have a shared objective, empowering European citizens. Now, the key question is implementation. How do we translate ambition into action? First, by ensuring that regulation remains proportionate and workable. Second, by investing consistently in financial education. Third, by recognizing and leveraging the role of financial advisors as trusted intermediaries. And finally, by continuing this dialogue. Because cooperation between institutions, industry, and professionals is essential to building a financial system that truly works for citizens. As FECIF, we remain fully committed to contributing to this effort. Through our work, including the White Book, we will continue to bring forward evidence, insights, and proposals, and to ensure that the voice of financial advisors is heard at European level. Let me conclude with a simple thought. If we want a stronger Europe, we need a stronger participation in its financial system. And if we want stronger participation, we need informed, confident, and supportive citizens. This is exactly where financial advice makes the difference. Thank you very much for your attention, and I look forward to continue our discussion during the networking section. Thank you. Stopped. How are you?
Ja, der Kanzler hat ja passend jetzt geht die wieder aber dann was ist dieser sie noch durchzuführen. Es ist immer wieder die Sorge kann man da Yeah, that's right. That's what it is.